Hello everyone, what's going on? How are we doing today? If I could get a quick mic check and let me know that you guys can see the E-mini S&P hourly chart. All good, awesome. Thank you, Papa Vlad. Stephanie, hello, good to have you. Thanks for joining. All right, Anita, thank you. All right, good. So everything is good. Hydra, hello. Salwan, hello. Mitch, Anita, hello. JIS, good to have you, my man. Carla, let's get into it. Glad to have you. So this is a little bit on short notice. I just wanted to come in and give you guys a brief update with what we're looking at. I haven't been too active on the YouTube channel with live streams for this week. So I just want to come in here briefly, share with you guys where we're at, what my expectations are for the remainder of the week, and obviously seeing our targets hit. So just for right now, because we are in the middle of the afternoon session, my attention on the daily chart, just to give you guys some targets. For those of you guys that were on Sunday attending the live, you guys know what we're looking for. Again, you guys don't even need these updates because you guys should already have these levels in your notes. But the next target for S&P will be this level right here, which is 41.95. For NASDAQ, content. Go ahead and swing NASDAQ over. So on the weekly chart for NQ, the next target that we're pulling into will be this level right here, which is the midpoint. So we're looking at 14,432 on the NASDAQ. So that's my next downside target for S&P and NASDAQ. So I just wanted to share those targets with you guys before I get into what it is I'm going to share today. And then hopefully by the time I'm done with my analysis, it'll deliver to those levels, and then we'll laugh about how random all this really is. So again, thank you all for joining us. Rich, happy hump day, Professor. Good to have you, Rich. Lucas, hello. Awesome. All right, so daily chart. This is more just going to be a review. I'm not going to be taking any more trades today, even though I am still looking for lower prices. I'm just going to touch on a few things of what we saw this week. Go over why I called this as the high of the week, why I was expecting that, and just touch on some relevant points that we saw. It has been a tough week, with everything going on around the world, geopolitical events, the potential for multiple WAR wars on the horizon. So just a lot of things that make these conditions a lot more challenging. So you do have to have a great deal of respect for the risk that's in these markets right now. So again, we like to talk about profit. We like to talk about making money, but you do have to respect the risk, especially in the climate that we're in now. We've never had more difficult trading conditions. Again, because of all those events going on around the world, we're about to go into a new currency that will be digital. Again, the potential for World War III. All those things make investors less reluctant to want to put money at work. Think of yourself as an asset manager. You're managing $100 million fund of several clients. Is this a climate that you say, wow, I just have to risk money in this climate right now? I just can't wait to put money at risk. Absolutely not. So those money managers, fund managers, are more reserved in their investment and risk taking. So all those things are factored into the price delivery, and we have to account for those things. So that's why I'm telling you guys these are very difficult market conditions, again, because of the climate that we're seeing. So even though we're still having targets hit, the market's delivering, just like a dog, I whistle, it runs. Even though we're still having those targets hit, you still need to be mindful of the conditions that we are in. Cyclops, Dr. Dylan, good day to you, brother. Good day. Thank you for joining us. Hydra, relative equal lows, looking juicy on ES and Dow. Absolutely. Yep, I'm looking at those same things as well. We traded through this low, but remember what I told you guys about this low, that we'd have to trade through it and aggressively expand, and then that'll confirm to me that we're going lower, which is why the past 3 to 4 months we've been saying the stock market is going to absolutely crater, and we've been calling it all the way since up here. And again, the market delivering to the tune that we're calling. So before we go down into the lower time frames, again, I already shared my targets, what I'm looking for. I'm going to go into a little bit of the reasoning behind this call out I did. Let's see if I can get that. Here it goes. Here. Teach you guys some time and price. All right, so looking at NASDAQ, Hold on. It's the chat. Here we are. All right, so I sent NASDAQ analysis on Monday. And the way I was able to call this market is understanding time and price. I know you guys hear time and price all the time, but it has several applications. And that's how I'm able to time these markets and understand where it's going. So on the Telegram, on Twitter, I'm sharing that the NASDAQ is going to do something very specific. We're going to trade higher above these highs, here and here, equal highs. I want to see the market do what? Go above it and then sell off for the lows. How do I know that? How do I know the NASDAQ is going to want to reprice to that specific level and run lower? Am I just timing all the buying and selling pressure? Is my indicator telling me this? Absolutely not. I'm using time and price. The market is bearish. Again, for those of you guys that want the detailed analysis, go back through the last 2 to 3 streams on Sunday where I'm in detail breaking down what the market should do and why it should do it. This is just going to be a brief rundown on what we've seen this week. So again, how do I know we're going here to go lower? Because institutional order flow is bearish top down. If we look at the monthly chart, I told you guys what would we see on this monthly candle? Expansion lower. Weekly chart, we expect bearishness, so we're going to see the market do what? Open at this price, manipulate higher, get retail into thinking the market's going higher, to manipulate them into seeing the wrong side. Because remember, the stock market is a zero-sum game. New money is not created in these markets. It's just transferred. So for an entity or for someone to be making money, somebody has to be on the other side of that trade bleeding out. So when we understand that, it makes the market dynamics more clear to us. So now that we can see in hindsight, we had the open manipulation expansion, which is what we're calling for. My analysis was indicating to you guys that we're going to see lower prices. So whenever I'm in the Telegram and I'm sharing my analysis, how do I know the market's going to deliver here to go lower? Because there's traders with real orders here. People that have a vested interest in seeing the market go lower. They're indoctrinated by all the fake logic that we're taught to look at these markets, which is what? Support and resistance. So they see this as what? It hit it once, dropped twice, dropped 3 times, dropped. So now this is really strong resistance. So if the market breaks it, they're looking to do what? Buy it. Or if they're short, they have a buy stop here. So they're going to be buying it at an expensive price. Why is that advantageous to us? Because if we're understanding that the market's going to go lower, we want to sell it at an expensive price. But if there's already willing buyers at an expensive price, that's perfect. And that's how smart money looks at these markets. They're looking to cannibalize that mentality of trader. So they're going to take it here, trap the longs into the market, people that think the market's going higher. They saw Microsoft earnings, they saw Google earnings, they said, oh wow, you know, the data's really good. You know, look at Google and Microsoft, company earnings. I don't even look at it, but I read the headlines on the news because I want to see what are the sharks feeding the prey. What do they want them to think? So when I see that they're promoting all these bullish ideas that the market should go higher because, you know, earnings beat on Microsoft, all those things, I'm not looking at that. I don't care about it. I just understand they're going to use that sentiment to get uninformed traders off sides. So how am I using that in my analysis? I'm expecting them to take it up here. So I gave you guys the why in a detailed explanation as to why I'm expecting that. Now let's go into the when. How do I know it's going to run here first and then here? Because time and price. So because we're going into Tuesday, that's when we expect the high of the week to form. In a bearish week, we're going to see that high form likely on when? Tuesday. So as we're trading higher into a premium level, which is a daily fair value gap, so this is price, and then the time is down here, which is what? Tuesday. So if I'm already expecting the high of the week to be made, I'm going to expect it to be done at a very specific time. All this is rigged and scripted. If it wasn't, trust me, I wouldn't be doing this. I'd fall on my face every single time I'd share analysis with you guys, but I'm not. So there has to be a lot more to this than what we were originally told about the marketplace. So it takes higher, traps retail long, or stops them out of their short. That's perfect for who? Smart money like us, because we want to assume that position. When they're buying expensive, we want to sell to them. So selling here, rake them across the coals, take it into the sell side. And then looking at the delivery that we saw, again, market trades higher. Turtle soup, high of the week. What is a turtle soup? It's selling to buy stops. So these stops here, you can use that as an entry. You can sell to those orders here and then write it down into the targets I'm giving you. And again, all this called before the fact. So when we're looking at the daily chart here, Tuesday, we're trading higher into this daily inefficiency, and I'm expecting this week to do what? Smash lower. So Tuesday is going to print that high of the week inside of a breaker. So we have a breaker here and a fair value gap. So I don't even want to see this upper inefficiency traded to because there's a breaker. So I want to see this be a what? A breakaway gap. So I'm qualifying these inefficiencies that I don't want to see filled real time. No hindsight, no after the fact. I'm telling you guys, I don't want to see this inefficiency traded to. Why? Because I want to see the reaction from this one. And if we don't trade up to this one, what's the algorithm communicating to me? For those of you guys that have learned from me privately or that have spent a lot of time with me, and just my free stuff on YouTube, you guys will know what this is. Newer people, probably not, but this is a weakness signature. The fact that the algorithm wasn't even able to reprice into these highs here communicates to me what? That the algorithm is exceedingly weak. So I'm going to expect the market to do what? Smash lower into these targets, which is why I'm sharing you guys we're looking for lower prices. That's what I'm expecting. And then we couple this with dollar. So for the Forex people, this is as deep as we're going to go into Forex today. Have my lady cooking a very fine lunch that I'm going to enjoy after, and I'll probably be hearing from her soon that I'm going to have to get on this live stream. So get off it. So let me go ahead and get on with the analysis. Hydra, thank you very much for the donation and the appreciation. Very much appreciated. Thank you very much. Hydra, retail logic is the best narrative for ICT traders. Absolutely. Because like I shared the dynamics of the market. If someone's making money, someone has to be taking it. So once you understand that's how the market works, use that to your advantage. And that's exactly what we're doing here. So I took our attention to this weekly inefficiency here on dollar. So now I'm further qualifying what I'm calling in the stock market using the dollar. This is what takes a simple analysis to a whole nother level of precision. So seeing how this level here, what I share in the Telegram, that and even from Sunday, that I want to see how we trade there, and I would not want to see the market get below it, indicating that we should see a strong reaction from here. Verbatim, word for word, that's what I shared. So when we drop down into our daily chart, and we see that weekly fair value gap, we're trading into it at what time? What day of the week are we hitting that discount level? Tuesday. So Tuesday, we're making a low and taking out stops into a higher time frame discount array. We hit that level on Tuesday, and then we rally higher. So while this is dropping here into Monday, people are asking me, oh, are we bearish dollar now? Are we looking for lower prices? Absolutely not. Trading below a swing low, that doesn't change anything. It doesn't change the dynamics of what we're looking for. It's exactly what we want to see. We want to see them take out these stops, and then how they take out those stops is significant. Stops taken, aggressive reaction higher. So I'm calling the reaction from this level, understanding the timing elements, understanding that Tuesday is going to likely print that low, and that we're going to see what? Aggressive expansion higher, which is why we're seeing a buy program in dollar. So the algorithm is offering price higher, 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 higher. What are we going to see in ESZ2023? What are we going to see in the S&P? Lower prices. So as we're trading to these key levels, I'm looking at intermarket relationship. And then I'm weighing these things out, and that's how I'm qualifying all these key turning points. I did the same thing for you guys last week. I called this being the high of the week before we even got into Wednesday's trading. And I'm using these same components. It's the same thing week in and week out. And again, every day, every week, and it won't stop. Earl, I really appreciate the donation, my man. Glad you're getting some value here, and the appreciation is greatly appreciated on my end. Hydra, I like your explanation. Awesome. Thank you very much. And again, thank you for the appreciation. Keeps me motivated to come out here and continue sharing this for you guys. So I'll get into a few questions. Sal, let's go, champ. Hey, Sal, hope you're doing good, brother. How's everything going with your analysis? I know we went to work on Monday. We looked at some live price action on a sloppier week, but targets hit that we were looking for from Monday, Sal. So nice delivery there, and plenty of stuff to study for your training, my man. Carla, how do I identify a reversal pattern? That's a really good question. So I'll go ahead and get into some questions today, and since it's a member question, I will go ahead and make sure we get that straightened out. So let's look at a classic reversal that we called this week. Again, as I've told you guys before, I don't like to teach on stuff I'm not calling, because if I can't call it before the fact, that's not someone who is worthy of teaching. You need to be able to show that you have the goods. You can call this before it happens. And when you're able to do that, that's how people trust what it is I'm sharing and that you can confide in my teachings. So looking at this here, how to qualify this as a reversal? All the factors I covered: intermarket analysis, understanding time. But here's another element that I'm going to teach today. Man, this was a mentorship level lesson. I should have charged money for this one. So looking at Tuesday here, high of the week, understanding time first, we see that we're trading above this high here, here, and here. And then looking at NASDAQ, remember I shared these equal highs. But why did I share NASDAQ and not S&P? Because NASDAQ's stronger. S&P wasn't likely to hit these highs, which is why I shared NASDAQ equal highs, because S&P wasn't likely to deliver to them. Why? Because NASDAQ is that relative strength leader. So looking at the reversal here, how was I able to qualify this as a reversal versus like a market structure shift? Because people could see this as like, oh, swing high taken out. It's a bullish market structure shift, 2022 model. The market should go higher. But how was I able to qualify that this indeed was a short and not a bullish change in structure? Because you have to understand narrative. You have to understand that institutional higher time frame order flow. That's how I know the difference between a shift in market structure or a stop run. The key is to understand what's your higher time frame order flow and market structure indicating to you. And I went into a real not elementary, I mean by retail standard, it was pretty advanced, but for what we know in terms of concepts and what we have at our disposal, I went into a pretty basic introduction into market structure a couple weeks ago in a Sunday stream. Just gave a little bit of points into how I look at market structure and what I'm looking at. But it's highly contingent upon understanding that higher time frame institutional order flow. If I don't understand that, I wouldn't be able to do these things. I have to know where the market's drawing on a higher time frame. And that's what allows me to trust a reversal pattern here instead of this being a continuation. Another thing, this was another question I was getting, and this is also for the client I'm working with now. So we look at this dealing range from here to here. And then I shared that I wanted to see the market do what? Trade into a premium, into this inefficiency, and break down and sell off. The market did just that, again, as usual. But looking at this here, looking at this range now from this high to this low, why was I not expecting a premium? Because the market structure suggested that it didn't need to do so. Why? Because there's a breaker here. If you drop down into a 12-hour chart, it becomes even more clear how we have a breaker here. Last down close before the rally higher. So again, as I told you guys, I don't even want to see this inefficiency here and here traded to. I want to see the market stay in this one. So that's why I'm not expecting the market to deliver to a premium. So there's a lot of context you have to understand to qualify these things. And again, the only way you learn it is getting your hands dirty, studying these charts, and again, working with somebody who knows how to teach it. If someone can't call this in advance, if they're not sharing these things ahead of time, again, they're not equipped to teach you. The way you learn this and pick up on all these subtle nuances is you have to work with somebody that's able to walk you through this on a weekly basis, just like I am. And I'm doing it here free of charge. So if you guys like this value, man, imagine what you guys would get for paid mentorship. So let's get the drawings back on there. And let's drop down into our lower time frames. So hourly chart for higher time frame traders. Again, you guys see I like to trade on a 1 minute lower time frames. But hey, man, I don't have time to do that. You know, I'm at work. I'm running a business. I have a university to take care of. I got you covered. We're looking for lower prices. So what are we waiting for? As my associate sent into the chat this morning, we get a displacement through a low, shift in market structure, sell short the fair value gap right here. Accelerates lower for the equal lows. On a 15-minute, same thing, except you can refine it further as you go through the time frames. Here we have a bullish breaker, which is this last down close, and an efficiency. We trade into the inefficiency and breaker, sell off. There's your 15-minute silver bullet entry model right there. And we've already discussed 3 to 4 entries on a daily, hourly, and 15-minute, and we haven't even got down into a 5-minute or a 1 minute. So as you start refining through the time frames, that's all you're doing. You're just refining what you're seeing on the higher time frame. And that's a key mistake that a lot of people make in top-down analysis. So I'm just clarifying a lot of things for you and also covering how it is that I'm making these calls here. Carla, bro, waiting on mentorship for real, for real. Awesome. I'm excited to have you guys. Cyclops, Dylan, the way you teach, your articulation, honestly, is just top notch. Thank you. I appreciate that. And that's something that's interesting as well, is when I first came into this business, like I told you guys before, I'm a trader first. Education, mentorship, training, that was something that was always secondary. My goal was to be a trader, obviously, but then just provide signals because it's so low stress providing signals. You don't have to worry about managing different personalities. Because the thing about education that makes it tough is that this is an extremely cutthroat business. It's a tough industry to cut it in because of the discipline, our psychological makeup. All those things make this extremely difficult. And that's one of the hard things about teaching is you have to deal with all different kinds of personalities. And a lot of people, straightforward, they're not equipped to learn this because there's so much to it. And again, I'm not talking down to anybody. I'm just being very realistic. I understand how hard this is. I've seen lots of people come and grow. I've worked with traders from unprofitable to profitable. I've seen it all. And I understand how tough of a business this is. And that's what makes training and teaching so difficult, because not everyone has the proper mindset to learn this. And that's why you guys notice a lot in these streams and in my Sunday analysis, it's a lot of mindset coaching as well. Because what you guys will realize as you're trading more and more is that it's less about these candles and it's more about the psychological battle between your ears. So once you can learn to manage all those things, that's what eventually comes together and makes you a complete trader. Cyclops, love how you make it clear and easily understandable, especially for people struggling to dissect ICT concepts. It's definitely a lot to it, and the way ICT's taught it is it's really disjointed. It's not extremely organized, but he is the source. So again, no shade, mad respect for the man. We wouldn't have learned any of this. We wouldn't have had any of this insight without ICT. So all respect goes to him. I hold him in a high regard, have a lot of respect for him, but just calling a spade, his teaching is a bit disjointed. It's not that organized. So when you have someone that has learned it, has put all that together, and can put it together for you, it will definitely reduce your learning curve and make it easier. Not easy, because it's still going to require a lot of hard work on your end, but if it is organized and structured and you are being coached properly, you will be able to learn the skill set without a doubt. Papa Vlad, your mentorship will be a gem. Thanks, Papa Vlad. I appreciate that, brother. Momentum Trader, Dylan, holy crap, where can I join your private coaching? I need it in my life. Come January, again, I'll open mentorship. The website will be done November. That's still the time we're tentatively shooting for. So in November, I'll have the website, and that's when I'll begin enrollment for private training again. But in the meantime, again, I'm just going to be hanging out with you guys here on YouTube and Telegram and doing all these things free of charge, relying on the trading. And then because of popular demand, I was asked to step into more of an educator, mentor type role, and I'm more than happy to do that for you guys. So with that, again, just plan on keeping it brief. Shared I wasn't going to do much trading, but I'll go ahead and drop down to the lower time frames and share what it is that we're looking for. I'll go ahead and take some questions. If there are any member questions, I'll go ahead and take those. Mac OS, welcome to Plus Adora. Yeah, thank you for joining the community. The support is greatly appreciated. Emmanuel, how are you so confident in trading the 1 minute time frame? Because of everything else I share. Again, I also cover a lot of misconceptions, which is that you just drop down into the 1 minute chart. That's not at all what I'm doing. You have to understand top-down analysis. And again, many times as I've said this, it has to sink in that top-down analysis, that is the secret. That's the holy grail. That's the best thing that it is that you're looking for. Once you understand how to do proper top-down analysis, the 1 minute chart, even the seconds chart, is easy to navigate. But you have to understand these higher time frames, because without it, you're navigating blind. Hydra, what mic are you using? I have no idea. I think it's like HyperX. If you want, ask in the Telegram, and our technical expert here at Adora Trading will get you all the details you need there. JIS mentorship still on for next month. Yeah, let me go ahead and cover that. I mentioned it before, but I know you guys aren't able to attend all of them and hear that. And I'll probably make an announcement in the Telegram as well. But I'm planning on moving mentorship till January. I was going to start in December, but because of the holiday schedule and, you know, people taking vacation, enjoying time with family, again, there's no bullshit here. You know, I'm straight up with you guys. I tell you guys it's going to be a lot of work to do this. So I wouldn't want to have to place all those demands on you guys as my students during the holiday months. So it's better to wait till January, wait till you guys are done enjoying time with family, holidays are behind us, and then January 2nd, we get to work. And then by then, it'll become all work, no play. So that's what we're looking at in terms of schedule and timing for everything. Hey Dylan, I believe I'm not using the SMT divergence correctly. Could you briefly explain the divergence between NQ and ES as well as YM, the Dow? Let's go ahead and look at that. All right, so let's go ahead and put up the three averages. So NQ, YMZ. And again, a lot of this stuff you guys will just pick up spending time with me. I covered this several times, real time, qualifying these things. But let's go and look at the three averages. So here we have S&P, we have NASDAQ, and we have Dow. So this is how I use SMT. I don't need it because I already know when it's going to form. I've already covered that for you guys. I don't need SMT because all it is a confirmation tool. But if you already know what you're looking for, you know when it's going to form. That takes a lot of time to get to that point, but that's why it's not something that I'm actively monitoring because I'm already anticipating it. But for those of you guys that want it as additional confirmation, this is where I look for it. We traded up to a premium in S&P. So you guys have to recall what I've shared and where we're at because there's a lot of context behind it. It's not just looking for that crack and correlation. So looking at our daily chart here, we see S&P traded up to that daily fair value gap. I was very direct and specific about this is the level the S&P is going to sell off from. I didn't call it higher. I didn't call it to the buy side, to that specific level. So with that context, what does that mean? I'm looking for the market to do what? Top here and drop. I don't call tops and bottoms on higher time frames, but in lower time frames, you absolutely can call tops and bottoms. And that's exactly what I did for you guys again this week. But seeing this here, this is a key what? Point of interest for me. This is where I want to see the market show me a willingness to drop. So as I'm monitoring this, I'm looking at the three averages and looking at the relationships at their highs. So looking at NASDAQ, NASDAQ did what? Lower high. S&P did what? Lower high. But what did Dow do at the same time? Dow made a higher high at a key level when I'm already looking for the market to sell off. So that crack and correlation, that indicates to these smart money traders, these traders that are in the know, that it's time to do what? It's time to get to work. It's time to start selling short, building in net short books. And again, I'll get into how market makers operate their books and all those details in private trading because that's a lot, that's extensive. But this is what it's communicating to the informed trader. And again, this is a language. These candlesticks are a language. It's constantly communicating something to you. But just like any other new language, like many of you guys probably don't speak Chinese, go into a room of people speaking Chinese and see what you pick up on. Probably not much. And that's exactly the equivalent of what you're doing coming into these markets unequipped to read this, and you're putting money in the market at work and you don't know what you're looking for. And that's why a lot of people struggle. And again, there's a lot of coaching that needs to be done for the mindset. Because the reason people are unsuccessful in trading is because they try to do too much too quick. You have to learn how to trade first before you can start risking capital. I know it's a novel idea, but you would be surprised how many people just start putting money in here and they don't know what they're doing. So again, got off on a little rabbit trail there, but back to SMT, that's how I'm using it. I want to see a point where I want to see the market reverse. And then using that, I'll use that crack and correlation to just further confirm it. And again, if you go back through my work that I have made public here on YouTube, you'll see countless examples of me doing that in Sunday streams on Forex, currency, and all the markets that we look at. So, If you want more work on that, again, you'll have that at your disposal here on the YouTube. David, most other YouTube focus on the pieces and parts, but you focus on the whole narrative. Makes all the difference. Thanks, David. I appreciate that. Definitely. You have to understand the complete picture to make sense out of all of this. Absolutely. Singto YouTube, yes, you are right. I love ICT, but I was so sleepy when I listened to a story. I need to learn step by step, not emotional strategy. That's something I hear a lot from people studying ICT. It's long-winded, it's tough, but, you know, a lot of the things he's sharing are good. You know, the psychology, sharing, you know, the things he went to. Like, this is a guy with 30 years experience in this business that we're trying, that many of you guys are trying to find success in. So even though he's long-winded, even though he can talk a lot about, you know, haters and all the you know, Vinny, all that stuff, he is sharing a lot of value at the same time. Yes, you have to deal with a little bit of off-topic stuff, but it's free at the end of the day. So to provide that level of education is for free is top-notch, top-notch. I mean, here in the United States, people drop hundreds of thousands of dollars to go to a university, learn practically nothing, and this guy's teaching the secrets of the market for free. No comparison. But I'm glad you like what I do, and it's helpful. That's why I do it. Singto YouTube for membership. Will you provide pre-market every day? Every day you guys will be getting market review and commentary from me on a daily basis in private trading. Absolutely. And again, all the details for that will be up on the website, guys. Matthew Davis, hey, can you give some advice on going on tilt for missing moves? Today I missed the initial breaker in the pre-market, and I didn't know how to get in. That is a good question. Yeah, so even myself, I called this analysis, but why am I not trading here in the PM session? I got stopped out twice this morning. I took 2 stop outs. I'm still holding a swing trade from up here. I added more here, so still deep in the money on that position. So in longer term trades, you know, obviously we paid the trader below that low. But for my scalping accounts where I'm looking to build income real quick, I took 2 stop outs today. I had the perfect analysis. So if we drop down into a 5-minute chart, my analysis was spot on. I knew the levels I was looking for, but because we had such a choppy morning, I got stopped out twice. Called the analysis. I wasn't able to profit off it in a scalp. I'm profiting off it on other accounts, but I got stopped out twice today on my other accounts, and I did not ride the moves down on those 2 accounts I wanted to get it. So this is my analysis. You know, I shared it with you all, and I didn't even make money off it. So if I'm at a point where, you know, you're here to learn from me what it is I'm here to share, if I'm not riding every single move, why would you expect to ride every single move? So again, that's just the reality of trading. You have to be okay with letting moves pass you. If you get in, great. If not, you got insight risk-free. That's the way to look at it. And you have to control those emotions and the expectations that we have to make money. It's just a lot of things that we have to manage as traders. And again, that's what makes this industry so difficult and cutthroat, because you're having to wrestle against yourself. So hopefully I covered your question, Matthew. Alistair, do you use standard deviation for targets? Absolutely. Sean, are you joining Robin's Cup along with ICT? No, I wish I had time for competitions, but we got money to make. I don't have time to mess around with any of that stuff. I'll be looking forward to ICT, seeing ICT smoke everybody, but I won't be there. I'll be on the sidelines. I got money to make, and again, I got a business to run here, so I don't have time for all the extracurricular. Lucas Klotz, will the Sunday stream remain? That's a good question. I got that question last week as well. Yeah, I'll continue doing the streams on Sunday. Mentorship students will be right there with you guys on YouTube hearing my Sunday analysis. That is mentorship level analysis that I'm sharing. They're paying for market commentary every day and working with me 2 to 3 times a week. The Sunday streams will remain on YouTube, and everyone will be learning from that free setting. Emmanuel, hello, brother. Can you touch on briefly the art of scaling into positions during trades? So the art of scaling in pyramiding, that is a class in and of itself. That's not something I'll be able to cover on YouTube. So if you want to learn more about that, again, I'll teach all that extensively later on. But there's a lot of things that you have to weigh out and have in mind when you're building in pyramids and scaling into trades. But that is something I will teach in the future. Anita Low, what do you expect tomorrow and Friday? Lower prices. So weekly chart, what were the targets I've shared for S&P? Well, first target was the previous week's low. We hit that. Now we have that sell side there. That's my interest. And then through that, well, let's go to our daily chart. So dropping down to the daily. Again, I shared my targets here. And if we get to this low here, it's going to make sense for the algorithm to just want to reprice about 9 handles lower into that sell size. So those are my targets going into Thursday and Friday. And then if we accelerate through that with animation, then my attention goes here. But these are my following targets on the S&P. That's about 70 handles. That's not that much a range. So going back up to our weekly chart, if we get through these levels and animated through them, my attention goes to this inefficiency down here. So again, longer term, my targets are the same. Again, I shared all this on Sunday. These are the levels we're looking at the market to go to here and here. So I will be continued going into each day expecting continued lower prices on S&P. And I do not want to see us get above Tuesday's high. So that should be the high of the week, and that should remain in place. So hopefully that covers your question, Anita. But another thing to cover that, or to confirm that, will be we need to see continued acceleration higher on dollar. Dollar can't become lethargic at these levels. I want to see continued expansion higher. So the fact that we're likely going to close above this level, I'd want to see this inversion act as support, send us higher into these key levels. So as long as dollar continues higher, I'll continue expecting pressure on the stock market. And again, we've been calling the stock market cratering for the past 2 to 3 months, and nothing's changed my outlook on the stock market moving forward. Grand Poobah. That's the beauty of 5-minute and 30-second model. It happens so often. You feel comfy with letting one get away from you. Absolutely. I have no fear of missing out. Yes, I did not participate in this run lower. All I was able to do was enjoy my analysis panning out. And that's part of trading. You know, as you guys know, made money yesterday, made money the day before, previous month. Some days you're just not going to get it, and that's fine. It's just about controlling those losing days and keeping them small. But of course, when you have high-powered entry models like I do, which is numerous of them, you're never worried about getting into a move. Once you understand where it's going, getting in is the easiest thing. How do you determine change in state of delivery at a higher time frame level? Basically everything I covered. You have to understand where the market's going, how high it can go on a retracement. So again, here I qualified this change in state of delivery to you. The market went from a buy program, which is offering higher, 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 to what? A sell program. What point did we make that transition? Bearish order block right here. Change in state of delivery. The market, after it pierces that opening price, the market goes into a sell program where it's just going to offer price lower, 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 regardless of buying and selling pressure. So then that's why we saw the change in state of delivery here. Again, qualified real time. And then we see the repricing lower. So when the market's in a sell program, it's going to offer lower, but it's more specifically doing what? Attacking discount levels, which is why I took our attention to these equal lows here. Smoked them. And then now on the downside, again, I took our attention to these two levels here. Where can I learn more about quarterly shifts on indices? ICT core content. Wasim, hey Dylan, did you notice that most markets tend to reverse on the 4 standard deviation? Absolutely. -4, -2, and -2.5. Those are significant points algorithmically. But again, you have to use Fibonacci extensions, the Fib extensions, in line with PD arrays. It's not just to get extensions and just use that. You have to understand what the market's reaching for. And then once you understand that, you're able to use the Fibonacci extensions as just additional confirmation. So that's how I use fib extensions. Mike Futures, Mike, do you ever trade the ICT 30-second model? I've been trading it ever since he released it, and I lost all my 3 combines. It's definitely a bad, incomplete model, not to be trusted. So, Mike, I think by the looks of your comments, 3 combines, I think that's more of an issue with risk management than the model itself. Every model is going to have losing trades. That's something you should know going into it. But again, it's not just looking for that pattern. So it's something that may help you as well. That helped me a lot moving forward because again, I was there. I just tried to apply models like 2022 model when I first started. I would, even before 22 model or optimal trade entry, I would just look for this pattern. But you have to understand what the market's reaching for. What's it likely expanding to? And then once you understand that draw on liquidity, it makes your models easier. And that's why we actually started doing all this. That's what even brought us on YouTube. My associates and I, we would be calling these markets to ourselves like over meetings, and we all trade, we all manage company capital and do all those good things, but we just be calling the market here to ourselves like on a weekly, daily basis. And then my associate Tommy, I'm sure you're in here, hope you're doing good, brother, he shared, why don't we come out and do this like on YouTube, like in front of our social media. I was like, that's a really good idea. We're doing this anyway, we might as well share it. And what's something that everybody struggles with? Where's the market going? Daily bias. We make that easy. For those of you guys that have been with us since the Telegram days, you guys know we've been calling this market for well over a year now. So with that, that's a roundabout way of answering the question is you have to know where the market's going. And again, that's why we provide that here, because once you understand that draw, then all your models are going to work. But you have to know where the market's reaching for and not just look at those models. So I can really resonate with your question, Mike, with regard to not being able to trust a model. But you have to know where it's going. Once you know where it's going, then it allows you that trust to understand why it should go there to begin with. So hopefully that helps you out, Mike, and I hope you are able to get back on track, brother. Matthew Davis, I can't find ICT on the Robbins Cup leaderboard. Have you looked into the Vinny? As soon as I see Vinny, I'm done reading the comment. We don't have time for drama here. We're here to make money and build wealth. Anything outside of that, I don't give a shit. Anita Lowe, thank you. Glad it was helpful. SH, opinion on bonds, ZN and ZB. Yeah, let's take a look at the bond market real quick. It just actually got done smashing our objectives. Let's go ahead and look at bonds. Nice delivery on the bond market. Man, what a beautiful call out. I've been doing this long enough, but it never gets old. I was just telling my associate today, once NASDAQ smashed our objectives. Man, this never gets old. Hitting equal lows here on the bond market, a beautiful repricing into those levels. So because we hit that, what level beyond that did I take our attention to? This inefficiency here. So my attention lies in the low end of this inefficiency on a monthly chart. So as we drop into our weekly, I want to see this candle after hitting that opening price, bearish order block. It hits that perfectly. I want to see this candle expand lower. So that's also more supporting analysis for what I'm looking for in dollar. So if I want to see bonds sell off, that's going to push the dollar higher, which is going to put pressure on the stock market. So all these things work together. Again, it's like a well-oiled machine. Once you understand all the different parts to it, everything comes together and makes sense. So that's what I'm looking at on the bond market. ZN is going to be the same thing. Yields are going higher. So we're going to see interest rates continue shooting through the roof. And that's on the basis of the Treasury bond selling off. Do you have a set function? Do you have the set function on all the time? I don't. So I use set for specific levels. All right, I'm getting the knock. That means lunch is ready. So I'm going to have to wrap this one quick so I can stay out of trouble. All right, so looking at set, this is how I use it. This is a perfect example. Let's go ahead and look at NASDAQ. So daily chart for NQ. We see here we have daily, you can't even see the volume imbalance. Perfect point. Awesome. So let's look at NASDAQ on a daily chart. So when set is off, we don't have the settlement price on. We see what? There's no volume imbalance there. This candle closes, this candle opens. But that's misleading because there's an inefficiency there. So if you turn set on, I see what now? A volume imbalance that retail's not seeing if they're not understanding to look at it. So again, there's so many tools, there's so many weapons at our disposal. You have to be taught properly how to use them all. So I use set when I want to see specific inefficiencies. That's the only reason. So looking at this here, look at how we opened. Lower on this candle, that becomes the volume imbalance. So in that inefficiency, I'm monitoring how we're trading. So all this is going into my analysis. As I'm calling the high of the week here, I'm factoring in all these things in. So seeing that the bodies, look at that perfect respect of this inefficiency. That's algorithmic. That's the algorithm telling me your analysis is spot on, baby. Hold it. We're ripping lower. And then we see this candle does what? Open, Judas swing higher into what level? The volume imbalance. Doesn't even get to halfway, which is what? A bear signature. Aggressive sell-off right into the targets I shared. So that's how I use set, just to see specific inefficiencies, but it doesn't have my interest for anything outside the scope of seeing inefficiencies. Alicia, today we saw Euro sell from a discount level. How can we enter on this trades with full confidence? All right, let me take a couple more member questions. All right, so Euro's bearish. So we're looking for lower prices on Euro. I covered the targets we're going to be looking for. I think first target was, fell short of. Where's Telegram? Come here, Telegram. All right, so I shared my targets on Euro. These equal lows. That was my first target. So if that's the level we're reaching for on a 2-hour chart. So yeah, we just fell short of that level. So almost hit that level. But looking at the structure here, because we took out that daily high, the market should just accelerate lower. So I wouldn't even want to see in this case the market run up into a premium. I just want to see the market sell off aggressively. Because if you look at that daily chart, this is now a bearish order block. As soon as this candle pierced that opening price, I don't want to see the market go deep into this bearish order block. So I'm going to expect the reaction to occur at this level. So you also have to know your daily key levels, and that's how you knew the market would accelerate from these levels. Or not how you would know. Let me rephrase that. That's how you would have confidence to understand why the market should sell off from these very particular levels and why we wouldn't expect the market to run all the way up here, because there's a bearish order block. So that's going to keep price at bay. How do you know it's a bearish order block? You have to understand where the market's going. And again, I provide that for you guys for no charge. Janice, put those likes up. This is gold. Thanks, Janice. And yes, please do hit that like button. Comment what you think. That helps us out here greatly. So hopefully that covers your question, Alicia. So I'll make sure we don't have any more member questions, and I'm going to go ahead and get going. David Lombard, dude, you're all class. Appreciate that, my man. Mike Futures, appreciate it, mate. Awesome, my man. Glad that was helpful to you, brother. Denisha, hey, sorry I'm late. Missed a notification. Not a very exciting session. Just covering some things, and the recording will be up as usual. Happy to have you, Denisha. What's your expectations for the PM? Already shared my targets, what we're looking for. All right, one more question. I got to get going. What's your take on trading off of levels like midnight open, new week opening gap, the close? Would you consider that a model? Absolutely. You can make a model out of anything. If it makes sense to you, if it has logic behind it, then you can make a model with whatever resonates with you. And that's what you're supposed to do with these concepts. Not take everything I'm saying and try to throw it into every single transaction. You have to have a model that has very simple, straightforward rules to follow. And then once you have that established, then your trading becomes easy. What does the model say? Do I take a trade here? If yes, you take your trade. If not, there's no trade. That's how simple your trading should be. And that's what professional trading looks like. Anita Lowe, will mentorship include signals or separate fee? Asking for a friend. That's a good question. So signals will be separate from mentorship. Just because mentorship is focused on learning. If you want to earn, signals is there. But mentorship will not be telling everybody where to buy, where to sell, and we're all making money, rah, rah, rah. That's not mentorship. That's not a proper education. You have to learn the why behind all these things. But if you guys want to earn as well, again, you guys know I'm going into the signal business as well. Papa Vlad, 227 silver bullet. Let's check it out. Nice call, my man. Papa Vlad, you are a killer, brother. That's exactly what I would be looking for as well. We retraced higher to a premium. I shared my levels here being the draw on liquidity. So the market's now going to expand aggressively into these levels. That would be a beautiful silver bullet. This would be a nice pyramid inside the breaker. Market's going to sell off aggressively below this low. And then I want to see speed through that low. And then that's going to tell me we're going to pull into this daily sell side. So that's what I'm going to be looking for. I will not be on here with you guys to watch it, but hopefully I'll come back after market close and see it deliver how I want to see. Daniel, will you continue to share daily bias on Telegram even after you start mentorship in January? So my participation will be limited in YouTube, on Telegram, and in other things because I'm going to have a responsibility and an obligation to my clients. So I will not be doing much public stuff. Content creator, still working with him to see how we can maybe repackage some of the things we're doing in mentorship and share that as content for you guys. But again, my obligation is going to be to my clients. Open Heart Ministry, great channel. Do you give analysis on stocks like Tesla? I do not generally, but I do analyze stocks when asked. Like on Sunday, a couple weeks ago, I was asked to look at Tesla. And man, we smoked our targets. I don't know who it was that asked for Tesla, but if you did ask, if you could come out and let me know it hit our targets, that I'd appreciate that. But when we were up here, the market broke down. I was expecting what in the stock market? As you guys know, the past few weeks, we're looking for lower prices. So I took our attention to the sell side on Tesla here, and we smashed into those levels beautifully. So Tesla sell side delivered. And again, I'm using my understanding of stock indices to understand the stock market. So Tesla's going lower, still going much lower from here. My next target for Tesla on the downside would be this inefficiency. So on the downside, I like that level. Through that, I like this candle's opening price. And then if we get through that, we're really weak, and then my attention goes to this sell side. So all the way down to 150 for Tesla in the near future. And especially if the stock market continues to accelerate lower, then I'm expecting all stocks to sell off, because in the stock market, all boats rise in high tide and all boats fall in low tide. So that's what I'm looking for in Tesla. If we refine this more on the daily chart, I prefer to see this entire inefficiency left open. We can trade into it, but I do not want to see it close in entirely, because that'll communicate to me that Tesla is extremely weak. So again, why am I covering Tesla? You asked about it, but I'm sharing that these concepts are universal. Once you learn how to trade, you can trade anything. So just wanted to cover that real quick, because I know we have quite a few stock traders here. And again, all this applies to the stock market. Imagine trading whatever it may be, Tesla, Nvidia, Facebook, Google, Amazon, Microsoft doing its own thing, Apple lower. You have to understand stock indices. If you're trading the stock market and you're not mindful of the stock indices themselves and where they're going, you're really navigating blind in a sense. So it's important to weigh out all those factors, because what are we seeing on the stock market? Pressure across all assets. And that's why, because we've been calling S&P where? Lower. Martin, how do you trade earnings season? Thank you. So I shared a real live execution trading the Microsoft earnings. Again, the earnings themselves, I don't care about. I think it's all fugazi. I think it's all fakery. I think it's all make-believe. I'm just understanding that smart money is using the sentiment from earnings to move the market where it's already going to go. Case in point, let's go ahead and look at ES yesterday. So I shared in my analysis that we would be looking for what in S&P? Or I shared on NASDAQ, these equal highs here, here, and here. So that's the price element, where the market's going. Now we have to understand time. What time is it going to deliver it? So we see consolidation in the PM session. Why is it consolidating? There's earnings for Microsoft and Google, two of the biggest weighted companies in S&P and NASDAQ. So I know that's going to have a lot of weight in the stock market, or in stock indices, excuse me. So when I'm looking here, what's my drawn liquidity? This daily fair value gap, but more specifically, those equal highs here. So as I'm entering here, and again, the executions are there, real money, no demo here. I went long inside this breaker here I'm buying and accumulating inside the breaker, expecting it to do what? Expand higher. I don't care what Microsoft earnings were, because if you see this opening here at 4 o'clock when the market opened, and then it delivered higher, over 20 points in the S&P. So now let me ask you, you tell me, who was able to read the earnings for Microsoft, analyze all that data, look at their forward guidance, look at their earnings per share and the expectation? Who's looking at all that, analyzing it, and then making a decision to buy this market to send it higher? It sounds ridiculous, because it is. The market's run on an algorithm. There's no buying and selling. So as the time, which is 4 o'clock, the earnings come out. So I don't care about the report. I'm just expecting the volatility. Where's it going to deliver into? My targets. So 4 o'clock, holding through all this, understanding that market makers are doing what? Holding it in a holding pattern for time, which is 4 o'clock, rode the expansion higher into my targets. So again, second to none here. Why? I'm sharing targets and then I'm trading it. I'm trading in the direction that I'm sharing with you guys. So money is where my mouth is. So Martin, hopefully that covers how I trade earnings. And then I also touched on how it is that I utilize that earnings information. The earnings themselves mean nothing to me. I'm just understanding that they're going to use that to manipulate retail traders. Another case in point here, looking at these equal highs here, here, and here. Man, this one's a masterclass. So looking at these equal highs, that's my target. They're going to use earnings as the smoke screen to reprice it into those levels. Again, we don't care what the earnings are. But what are they peddling on the news? If you go on the financial channels, what are they saying? Oh, earnings higher, stock market looking good, rah, rah, rah. We have a bottom in, the earnings on Microsoft, Google. It's pulling the entire market up. So all that nonsense. And what's retail seeing? Equal highs here, here, and here. Breakout. So they're trying to buy that based off the earnings or based off a breakout strategy. And that gives me even more confidence to see my targets hit. Because I know it's going to take them to the slaughterhouse and rake them across the coals below those lows there. So that's a little more narrative on earnings, how I use it, and how I was able to call these things. Christopher, thanks for your time. I'm glad you appreciate it. Cannot thank you enough. Have a great rest of your day. Thank you, Ahmed. Appreciate you joining us. Anita Lowe, awesome. Right way to do it. Thanks. I appreciate that. Mike Laybourne, welcome to the Adora community. And May dinner bell. Okay, so I got to get going. That means lunch is getting cold. All right, guys, I appreciate your time. I do have to get going. Again, looking to keep myself out of trouble here. So we will be in touch. Just wanted to share an update, recap what we saw, the call out I did, share you guys a little bit of the technical science that we do here. Gave you guys an outlook going into the remaining portion of the day and week. Share where we're at, give you guys an update, hang out with you guys. So I do appreciate your guys' time. Appreciate you joining me here. Again, please hit that like button on your way out. That helps us out greatly. And then the last bit of free game here will be looking for these targets here. That's what I'm looking for. So if you guys see me send a smiley face in the Telegram with a boom, you guys know targets are hit. So again, I'm not trading it, not putting live money, not trade advice, but just what I'm looking for this session. So, all right, you guys, appreciate your time. I will be signing off here. Have a great rest of your day. Again, thanks for your time, and good luck and good trading.